A warm welcome to everyone. Myself, Dr.G.Selvalakshmi, Assistant Professor of Commerce, Sri Sharada College for Women, Autonomous, Salem. Now I am going to discuss about income tax law and practice. First, we know about the term tax. Tax is a compulsory payment levied by the government to the general public. It is based on a certain criteria like amount of income, amount of sales, and amount of profit, etc. The main objectives of this charge is raising revenue to the government. It will help to promote the economic growth of the country. Then income. Generally, income means the money earned by an individual or entity. For example, the income may be in the form of salary, wages, or interest, or capital gain, and more. Income provides economic resources that shape our choices about housing, education, and more. So money play an important role in our day-to-day life in order to meet our needs. Generally, the tax is divided into two categories. The one is direct tax and another one is indirect taxes. Income taxes come under the category of direct tax. So it is important type of tax to the government. It is levied on income, gains or profits earned by a persons. The income tax was first introduced in the year 1860 in our country. After that, the law relating to income tax was framed on the recommendations of Law Commission and Direct Taxes Administration Inquiry Committee. Finally, the committee passed the bill in the year September 1961. But the Income Tax Act 1961 came into force from April 1, 1962. Before going to discuss about income tax, we should know some basic concepts regarding that. As per Income Tax Act 1961, income defined under Section 2, subsection 24. The income includes some profits and gains arised from business or any dividend or any voluntary contributions received by a trust, the value of any perquisites or any special allowances, the profit and gains arised in any form other than a business. The gain is arised from the capital investments, whether it is a short term or long term capital gains. It includes the term income, and sometimes the casual incomes may arise. It is also included in the term income under the Income Tax Act. For example, winning from lottery, crossword puzzles, horse game, gambling, betting. It's also included the term casual income. So it is also included under the term income as per the Income Tax Act. Then the term assessment year, it is specified under section 2 subsection 9. Assessment year means taxable year. Simply we remember it is a taxable year. Normally the assessment year period is 12 months. It is starting from 1st April in the year and end on the 31st March of the next year. For example, the assessment year 23 and 2024 it is commenced on April 1, 2023 and it will end on 31st March of 2024. Then previous year is specified under section 3 of the Income Tax Act 1961. Normally the income earned year is called previous year. That is, the income earned in the previous year is taxable in next year only. For example, 2022-23. In this year the income is earned. It will be taxable in the year 2023 and 24 only. The another basic concept of income tax is person. The person is specified under section 2 and subsection 31. An individual is treated as a person as per income tax. The individual means nothing but the human being is an individual. An individual may be a male or female or a lunatic in whatever name it's called. Then Hindu undivided family. A family consists of all the members of the descended from a common ancestor, including their wives and unmarried daughters, is called Hindu undivided family. Then a company, the company is defined as an artificial person created by law with perpetual succession, a common seal and common stock divided into shares with limited liability is called a company, and the company is also included the term person as per income tax. Then a firm. The firm is a partnership which is defined by the Partnership Act as a relationship between persons who have agreed to share the profits of the business carried on by all or any of them acting for all. So the persons is called partner and collectively they are called firm. Then association of persons. If two or more persons associate themselves for managing a property for the purpose of producing income, or when there is a combination of persons formed for the promotion of a joint enterprise, they are said to have formed an association of persons, provided that it is not a Hindu undivided family, a firm or company or a local authority. The objectives of the association must be for the purpose of earning income. Then a body of individual means the individual who carry on some activity with the objectives of earning some income. It would consist of the individuals alone. The entities like companies, firms cannot be a member of body of individuals. Income tax shall not be payable by one assessed in respect of the receipt of share of income by him from a body of individuals, on which tax has already been paid by such body of individuals. Then a local authority, it includes a municipality, a municipal corporation, the district board, panchayat, cantonment board, and port trust, etc. Then artificial juridical person, any public corporations brought into existence by a special act of legislature, like life insurance corporations or any university, etc. It is called artificial juridical person. A private religious trust, an idol or a deity fall under this category. Finally, all these above the 7 category is treated as a person under the Income Tax Act. The term assessee means is nothing but any person who is liable to pay tax or any some other sum of money in the form of a penalty or interest in whatever name called it is payable under this act is called assessee. The assessee may be classified into different categories, that is ordinary assessee, representative assessee and assessee in default. The ordinary assessee means nothing but the assessee is treated as ordinary assessee normally, a person who is liable for his own income or loss. The person is liable for his own income means the person is payable to tax to the government. In case the person suffered a loss, that time also he has to return a file to the government. Then representative assessee or deemed to be assessee. That is a person may not be liable for only for his own income or loss, but also on the income or loss of other persons is called representative assessee. For example, a person acts as a guardian of a minor or a guardian of a lunatic person, or sometimes the agent of the non-resident is also called the representative assessee under the Income Tax Act. Then the final category is assessee in default. A person deemed to be an SSC in default. When the person is treated as SSC in default means when he fails to fulfill his statutory obligations in time. The time the person is treated as SSC in default. Any individual is liable to pay tax. It means before that the individual person must know the residential status of their own. The residential status is divided into three categories, that is resident and ordinary resident, resident but not ordinarily resident, and non-resident. In order to know the residential status, certain conditions to be followed under the Income Tax Act. In case the person fulfill at least any one of the basic condition, then only he will be treated or she will be treated as a resident in India. In case he does not fulfill any one of the basic condition means then he or she will be treated as non-resident of India. In case the person or the individual assessee fulfill the basic conditions or both the additional conditions, then he belongs to the category of resident and ordinary resident in India. In case the individual assessee fulfill one of the basic condition, he able to get the status of resident, and he does not satisfied any one of the additional conditions or none of the additional conditions means then he will be treated as resident but not ordinarily resident. As we know, there are two basic conditions. The first basic condition is any individual assessee must be in India at least 182 days or more during the previous year. Then the individual assessee will be treated as resident. The second basic condition is the individual assessee must be in India for at least 60 days or more during the previous year and 365 days or more during 4 years preceding the previous year. When the second basic conditions will apply means when the first basic condition is not satisfied by the any individual assessee, then we go for second basic conditions. If an individual assessee fulfill any one of the basic condition, it is enough, then he or she is said to be a resident in India. In case the individual assessee not fulfill any one of the basic conditions or none of the basic condition means then he or she will be treated as a non-resident of India. In these two basic conditions, there are some exception in some cases. For first, what is the basic condition? The individual has to stay in India for a period of 182 days or more. Or this is the first basic condition. Suppose it is not satisfied means then we go for another basic condition instead of the 182 days what the individual assessee has to fulfill 60 days in the previous year and 365 days in the preceding previous year. This is the basic condition. But in certain cases some exception is there. What are the cases means in case of an Indian citizen leaving India for a purpose of employment in the previous year. In that situation, the individual has to stay in India for the period of 120 days. That is replaced. That is sometime we give the option no the more instead of 182 days he must stay in 60 days or more during the relevant previous year. That 60 days is replaced 182 days only. For in case of Indian citizen leaving India as a crew member of a trip in the previous year, and at the same time in case of a person of Indian origin and settled in foreign country, he or she come to visit to India during the previous year. In these cases, the 60 days is replaced by 182 days. that basic condition is applied only 182 days or more during the previous year instead of 60 days or more during the relevant previous year. Then the additional conditions. The additional conditions are specified under section 6 and subsection 6 of class A. Once the individual assessee is become a resident in India, then the following additional conditions shall be applied to find out whether the individual assessee is become an ordinary resident or he is a resident but not ordinarily resident. So the additional conditions are two additional condition is there. For to know the residential status of an individual, the person must fulfill both the additional conditions. The first additional condition is resident in India for 2 out of 10 years previous year preceding the relevant previous year. This is the first additional conditions. At the same time, he must fulfill the second additional conditions also. The second additional condition is he or she may be stay in India for at least 730 days in all during the 7 previous years immediately preceding the previous year. If an individual assessee satisfied both the additional conditions, when the individual assessee satisfied both the additional condition means then only he or she is treated as a resident and ordinary resident in India. In case if an individual assessee satisfied one of the additional conditions, and the first additional condition he is satisfied but he does not satisfy the second additional condition means then the person is treated as a resident but not ordinarily resident in India. How the person is treated as resident means because he or she satisfied the any one of the basic condition, then the person is treated as resident. If not satisfied the additional condition means then he or she will be treated as a resident but not ordinarily resident in India. So we remember the person or the individual assessee become a resident and ordinary resident, he must fulfill any one of the basic condition and both the additional conditions. In case the person not so means he is treated as a resident but not ordinarily resident. While calculating the residential status of an individual, we must consider some key points in our mind. As we said, the stay in India is 182 days or more. The stay need not be for a continuous period. At the same time, the stay is not required at the same place. The individual assessee, sometimes he may stay in Tamil Nadu, sometimes he may stay in Mumbai, and during the period of 12 months or few months or 2 or 3 months he stayed in somewhere else in our Indian geographical region. So it is considered as stay in India. Collectively the days are calculated for to find out the residential status of an individuals. If a person is in India only for a part of the day or the number of hours he stay in India, so it is not considered. While calculating the residential status, the day he enter into India, at the same time the day he lives in India is to be considered for calculating the residential status of an individuals. At the same time, the person of India origin means he or she or any one of his parents or any one of his grandparents should have been born in undivided India. Then the person is treated as Indian origin. At the same time, the he or she stayed in India. The purpose of staying is not necessary. It is not immaterial to. It is immaterial to calculating the residential status of an individual. Whether he may stay for the purpose of business or he may stay for some personal purposes or visit India as a tourist in whatever reason he stayed in India, it is immaterial to the calculation of residential status. The person stayed in India during the previous year as per scheduled in the Income Tax Act, that is 182 days or more during the previous year, then the person will be treated as a resident in India. So the purpose of the reason he stayed in India, it is completely immaterial to the calculation. I hope all you understand the basic concepts of income tax and calculation of residential status of an individual. Thank you so much for your listening. Soon I meet you later in another topic. Thank you.